Hi, welcome to podcast where I'm going to be looking at manufacturing accounts. There'll be two podcasts on this topic. The second one will look at how we adjust both the income statement and the statement of financial position. However, key thing about manufacturing companies, obviously they make things, and what becomes different therefore is they have three final accounts. The additional final account is called the manufacturing account. Biggest difference between a manufacturing business and other types of business is they will actually have three types of inventory. They'll have the raw materials, they're the things that they're going to turn into finished products. They'll have work in progress at the end of the year, so that's things that are part made. So if you think about a car business, they run a continual manufacturing process, and it probably takes about 2 to 3 days for a car to get all the way through the manufacturing process. So there'll be 2 or 3 days worth of inventory actually in the factory at some point and being produced. And then you've got finished goods. They're obviously things that they finished manufacturing and now ready for sale to customers. And the other thing that is a little bit different, but you'll see that in the next video, we use cost of production and not purchases in the income statement. So what does a manufacturing account look like and how do we do it? Well, the top part of the manufacturing account follows a pretty standard sort of format or layout. So what we'd expect to see, or what you will see at the top, you will see the calculation of what's called the prime cost. And the prime cost has all of the direct manufacturing costs. And a direct cost is a cost which increases directly with each unit of output. So for example, the people working on the production line, if we produce an extra car, we'll need to use extra labour to produce that car. If we produce an extra car, we'll need to have more raw materials. And there's a strange one, although it tends to come up more A-level rather than IGCSE, there's something called royalties. And very often people, when they invent things, will sell the right to other people to use that invention. But every time you make a car that contains something in it which has a royalty on it, you will pay the inventor a certain fee, and that'll be pre-arranged. So top half of the manufacturing account looks pretty standard. We always start off with our opening raw materials. So for this business here, we start off with the raw materials at the 1st of November 2014. We then add on to that the purchase of any raw materials by the business. So in this case, the business has purchased $24,000 worth of raw materials. So we've got a running total of 32,000. And then what we do is we subtract from that any raw materials still in inventory at the end of the year to find out how much the raw materials that we've actually used in the manufacturing process it costs the business. So in this case, $9,000 worth of raw materials are in stock at the end of the period. So the cost of the raw materials actually used in the manufacturing process is going to be $23,000. And then we add on to that definitely the cost of any direct labour, such as workforce actually working on the shop floor, in this case $30,000. And I've put in some royalties for using something somebody else has invented of $4,000 for the total year. And then we come up with something called the prime cost. So you've got to really learn that layout, and that's something that you will almost certainly get examined on in your final exam. And then to finish off the manufacturing account, what I've done here, I've put down some extra expenses. And what's really important, when you come to do your exam, you only put in the expenses that are linked to the manufacturing process in the manufacturing account. You'll almost certainly have some things put in which are a distractor, and they want you to put those into the manufacturing account. And unlike some examinations, you do get negatively marked, because those odd marks for totals, you won't get them if you've put in things that shouldn't be in the manufacturing account. So looking down here, factory manager's wages, clearly that links to the manufacturing process. However, accounts department don't, so that shouldn't go in. Rent, we'll come back down to that one in a few moments. Then we've got depreciation on machinery. That will be a factory expense, but the computers will be used by the admin function of the firm, and therefore that depreciation won't go in. So make sure that you've identified anything that shouldn't go into the manufacturing account. And this is quite common as well. You're told that in terms of the rent, 75% of the floor area belongs to the manufacturing side of the business. So what do? Well, we've got the top half of our manufacturing account, and then what we need to do is to add in all the additional expenses. So 30,000 for the factory wages, 20,000 for the factory manager's wages. For the rent, because you're told that 75% of the area belongs to the factory, we would do the 40,000, which is the total amount of rent, and we multiply that by 75%. So we've got 30,000 of rent, and we've got the depreciation on the machinery. So the total expenses are 55,000. And now we've got something that quite often students make mistakes on because they've come from the income statement. Okay, but the prime cost is a cost, and we add on those additional expenses. We don't take them off like we do in the income statement, because with the income statement, we have a profit figure, a gross profit figure, and we subtract expenses. Here, we're building up cost. Okay, so the total cost for 112,000, and then what we need to do to come up with a final figure, we've got some work in progress at the 1st of November 2014 of $3,000. That gets added on, and that gets added on because of the matching principle. Those were goods that, although we started manufacturing them last year, we finished them, and therefore we sold them during the financial year we're doing the accounts for. So we need to add that $3,000 on, because that's part of the cost of the goods that we've sold this year. But what we also do is we less the work in progress at the end of the year, because that $4,000, that will link to items sold next year, and therefore that $4,000 worth of cost isn't part of what we call the cost of production. So add opening work in progress, less closing work in progress. If you think about it, it's not that hard, because that's already what we're used to doing in our cost of sales calculation. We add our opening inventory, we less our closing inventory. Right, that really covers the theory for this lesson. It's quite nice and short. What I would like you guys to do is, you've got a student worksheet there, you've got an example where you've got to do a prime cost, and then you've got an example where you've got to do a full manufacturing account. Over to the right, you'll find a checklist saying what you can and can't do. But good luck with that, and then welcome back shortly, where you'll see the second video, which is going to cover what we do in the final accounts. Thank you very much. Bye.